Money on my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Raiden, and we are back at it again with another episode of the Robinhood Portfolio Update. Sorry I missed a video. I had my pre-records done for Thursdays, but I was just not in the headspace to record on Tuesday evening. I was just not there. And so we skipped that one. And then honestly, I'm kind of still not in the headspace for recording, but the show, this must go on. And yeah, we'll just leave it at that. We're jumping in the portfolio. Oh my goodness. Let's go ahead and get on in there. Don't forget to hit the like, share, subscribe, and especially sharing the content always helps out. We are at 392 subscribers on the march to 500. I'd like to do that by the end of the year. We'll see, because I got some definitive content coming. And probably gonna try to add in some more content going into the beginning of the year, not necessarily flooding the feed, but just getting more of my opinions and thoughts out there in this financial, I'm not going to say hellscape, because this is there's tools that didn't exist when I first started on my financial journey that make this so much easier. So the financial chessboard we find ourselves on, for some of you, it might seem more like a checkerboard. It does seem more like a checkerboard sometimes, but we're going to go ahead and jump on into it. First thing we do, obviously, we start off in the Robinhood portfolio because we give the receipts. You can't argue, you can't contest numbers. Portfolio value, obviously some after hours market fluctuations, but we're up 6.98% on the day. We are at $7,398.88. Go at the start of this portfolio of this recording. The first thing that we do every time is I go ahead and give the rundown on our share counts and what we're holding. So we've got 6 shares of Hood, which commemorates 6 months of being with Robinhood. Pretty cool. And then we have 890.09 shares of Ulti, which is the foundational position in our portfolio as of right now. We've done an adjusted wheel method. So we basically, because this is our 17.43 shares of HOOW. I don't like buying that when it's up or breaking even. I only buy the leverage position when it's down. So we're getting Ulti up to $100 a week. Then we will probably be picking out and starting a third position, because we try to always buy what's on sale with these high yield, especially the leverage ones. And how HOOW is in the realm of break even right now. Our breakout, which is up 70.48%, which is pretty awesome, is open. And I did announce this as one of my moonshots. And now that we can have multiple portfolios, I will be probably branching out and making a moonshots portfolio, so that way we can kind of update that. But I did go ahead and buy our 100 shares, and then the price just ran and has continued to run, and it's actually sitting around my buy cap, which almost has me convinced to go ahead and throw a full grand in it tomorrow and let it sit. But the violent fluctuations on this thing, I almost just want to wait for the next pullbacks. I think we're probably going to have some more pullbacks. But the FOMO in me is like, drop the grand tomorrow. Yeah, because I'm recording this Thursday evening. And part of me is just like, buy now and then let it run, because you're still going to be within range. It's only going to drag my cost basis up it'll drag it up quite a bit. But then I could just sit and wait for dips and average down on those dips. It's just really one of those things where I called it and then didn't act on it hard enough. I was like, I'm going to dollar cost average. I probably have time. But even with a cost average of $10, to be honest, for me, will be worth it because we're targeting 30 is my target, between 30 and 50. Probably adjusting up to 50 for me personally. The gurus say it's going to 82, which would be pretty awesome. But yeah, no, I want to get some more shares. Like I want to get in there, have a good standing position. But I also want to make sure we're funding the priority of this account, because this is not an account for gambleation. This is an account for lifestyle income. So getting ulti to $100 a week is also a priority. So yeah, so that's where we're sitting with that. We're going to go ahead and jump over to our next screen. I got to pull this down and set some stuff up. Go ahead and make me big. There we go. Pull up the next screen, which is our context. So that way we can look, because having a day where basically everything's green is pretty nice. But so is seeing the money flow. So let's talk about it. As we're sitting here looking at our Snowball Analytics, which is what I use to track my dividends, and we're going to go over our key metric numbers that I keep an eye on. Portfolio value, we're at $5,744.14. Our total profit is at 18.1%. We're sitting great, man. I am very happy with the way that I built this portfolio. We are still in the pocket at 80.04%, 81.04%, which we try to stay above 80%. That's just, and this is an arbitrary number. I know some people were like, oh, well, you sold off Misty. And I did, because it drug my primary portfolio well below 80%. Like if it was 75%, that's a different conversation, but it was literally in the 60s. And that is not what I want for that portfolio. It's not what I like managing. That starts getting into slow money. And as the account, I say slow money as though below 70% is slow money. It's not. It's slower for me than what I am capable of managing. It's just, so like me sitting in the 60s is me being lazy. That's, set and forget. You just hold on to it indefinitely. Wait until the NAV goes up. I was up 20% already on those shares. Don't care. This is about income. So for me, getting down to 81.04%, kind of a little bit worrisome, but we're going to be piling more into ulti, which will kind of prop that up, because it's based around my payments on ulti. The NAV, we're been at about, what is it, 9 cents, which is cool. I'm factoring all my positions based on an 8% payout. So 9 cents is still above what I would be expecting to get. This dividend, or this distribution on Friday, which will be today as you guys are watching this, we'll be going back into ulti come Monday, because Robinhood pays late. It's the one drawback about Robinhood. But if they don't negotiate my margin rate down, which I'll be probably making that phone call tomorrow, over on Charles Schwab, then there might be a lot more money in my Robinhood account, because I'll put all my income over there and just call it a day and have two separate portfolios. And I'll just transfer in and make another one and just have them both over there and get paid late on everything. I don't care. But yeah, so those are the other things that we're looking at. We're looking at about 16% of our goal, which is $4,000.66 annual, or $4,652.34 projected over the next 12 months, which gives us $387.69 monthly, which is nice, but like we want to get that up to $1,000. And since we have made some major headway in our income portfolio, we're actually almost to a point to where I can start dialing back in that portfolio. And the reason being is once we got to about $3,000 a month, that is kind of the range that I was looking at before I started moving, shifting my Cash App strategy over to my Robinhood portfolio, which will be pretty interesting to see how that goes. I'm still going to be taking the stipend out of my primary income portfolio to facilitate that until we get our numbers up in the Robinhood portfolio. But I do have about $4,000 more going in to the primary income portfolio before we make that switch, because I do want to finalize that portfolio out. And what does that look like? Because I'm in the income range that I want to be at right now. What that's going to look like is 5% holding, which is basically going to be $1,500 in cash reserves, which we'll be doing stretch STRC from MicroStrategy, and 5%, which will be basically for what we're doing right now, because we're doing it bare minimums, $1,500 in blocks, which will be kind of that portfolio's crypto theme. So I wanted a diversified crypto-based foundation in that, and they actually do have a slight focus on NAV growth as well as weekly distributions. So we're going to have that in there just set on permadrip. That will not be used to work on the debt. That's literally just going to be used to build up a foundation base. And stretch, which is our cash reserve, we're also going to set that on permadrip until we need to sell off, because any opportunities that come up will be pulling from that pool of shares. We'll sell them off and use that for our liquidity. I just don't like holding cash. And there's constantly a negative balance. I don't want to have to just be indefinitely tapping margin, because the margin is being used to facilitate paying off debt. So once we get those two positions set up and off to the races and going, we will then start moving into running the Cash App play. But instead of putting the $1,000, well, it's $900 because we take 10% off for our Bitcoin standard. But the $900 which I think the way that this works out is it's about every 3 weeks that I get to tap that, with the way that I'm paying it back now. And now that we're getting that weekly income versus waiting for the end of the month, we're able to chunk at it as we go. We will be shifting that $900 will be actually flowing into the Robinhood portfolio. So we're going to see some growth on this. One of the other things that happened is I have a pool of cash that I keep in my Cash App to help it's kind of spillover. So like if I don't spend all my stipend that I give myself for additional things to lunch throughout the week, I will put it in my savings over in Cash App just for as like a short-term liquidity holding. I also have a little bit of extra savings money that I force myself to send over there. And it's just kind of like a catch-all, a cover. And so I always have a flat balance in my savings over on Cash App. I have $100, but it'll accrue over time. And every time it hits about $500-600, actually I got $600 since I'm keeping 100 over there, I'll pull 500 of it. So like I'd actually hit the $600 mark. So I was at 694. And so what I did was I pulled $600 out of it. And obviously we had a chunk of that go to our 10%. So $60 went to buying some Bitcoin, bought some Bitcoin. And The other 540, I went ahead and threw it in the Cash App. Like that's what that's gonna go towards, because it's just extra money that I'm saving. Because I like saving money. Like I do. So little bit of money on the side, and then as it builds up, you get like a little dopamine hit. You get that big buy, I guess. I mean, I understand $540 isn't a big buy for most of you, but I live hand to mouth, paycheck to paycheck, because my money gets dispersed and spent as soon as it comes in. And by dispersed and spent, I mean most of it goes into savings, as you guys have seen, like 56% last month. And these are months that we are actively focused on eliminating debt. I'm pretty excited to see what our next pullover is going to be from converting the credit card debt into margin debt, because it's lower interest rate. So we're stair stepping the interest rate down. We've got a few more large payments on the card that we're currently working on. The dynamics of my margin account, as far as what we can use, has changed, because I've shifted my stuff around. So I've ratcheted up my personal volatility to increase my income. So we're still fine with what we're doing, but the maintenance on a couple of my funds is a little bit higher. So like it kind of affects how much margin you have. Not necessarily anything in a bad way, because I was staying well below what my margin needed to be, but just something to keep in mind. Like this is all a math game. You're flowing capital. It's cool. So the lifestyle portfolio, I think once we get to $1,000 a month, I will actually start directing this towards anything that's left on the Robinhood card. This will then go towards that, and we'll probably start pooling cash throughout the month. So instead of having a negative balance, we'll have a positive balance. And then as we come towards end of month or payday, probably every payday, I'll send off whatever is there, and then this will be a catch-all. And then whatever's left over, we'll just obviously reinvest back into some more income, but that way this will actually start being utilized as well. So that'll be pretty interesting. And then, that'll leave everything in the income, the primary income, going towards taking down the mountain of managed debt that we've got, which is down to around $23,000 now. That's all I got for today, man. Yeah. So with that said, got a piece of dust on my mouse. With that said, we're just staying the course. We're watching the portfolio grow. This started from zero. We've been hitting it with side money, extra saving money, windfall money, side hustle money, and just showing how money can add up when you allow it to start compounding upon itself, and to show that these portfolios can grow to a pretty decent size starting from zero. Because we started this portfolio from zero, and now we've just broke $7,000, which I look up and I'm like, that's 6 months. It's $7,000, and it's producing $300 and almost $400 a month. I mean, that might not be much for some people, but for some people that could be a lot of money. And we just did it in bits, chunks, side work, whatever we could do. You got to get out there and grind, but making your money work for you to make more money is definitely one of the things that I like to do. So with that said, it's your boy Reckless Red and Arrow. This has been another Robinhood portfolio update. Don't forget to hit that like, share, and subscribe on your way out. And I will be back at it again with you next week to see where we're at. Peace.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.